Morning guys, just wanted to show you a chart from Marco's having a look at the Dixie, and we've got an EURUSD long signal which is going really well, and the Dixie made this like fake breakout and a dump, and we're now below this order block. So Marco is suggesting that we're going to use it as resistance. If we do go up high in the dollar, it's likely going to face resistance and it's going to come back down again. So that means the EURUSD is likely, possibly going to dump, but then it'll be a buy a dip. So if you don't really want to be too bearish the EURUSD right now, because the Dixie is breaking down and we had this fake breakout and now technical confirmation for a sell. It looks like we're probably going to start moving down. Can you see the zigzag? Swing high, swing low, swing high now. So I think we might be coming down. And also just to say, it's also just to confirm that, is that we've got a poor score on the dollar as well on the sheet. And look at the weekly change for dollar yen. It's really fallen. So that's like a sentimental view that complements Marco's technical analysis. And don't forget, Marco is an award-winning technical trader. He got the best trader in South Africa award, which is pretty amazing. So he's with us, which is pretty awesome. And be sure to check his charts in Discord. Risk calculation. Okay, so we're risking on the big picture, and the herd have shorted. So that's a bit ominous, because you know it already was a buy, and then if they're going to sell it on the 24 hours, it's going to make it more of a buy over time. The technicals have improved as well. There is something of note, is that the US tech has taken a breather. Like Google, Apple and Tesla are down on the week. However, I think this might just be like a retracement, a healthy retracement. The VIX is up quite a bit as well. So you've got to be a little bit careful, but sentimentally we're pretty risk on. Okay, Friday, we can see that they've shorted France, and they're shorted gold. They've gone long oil as well, and I'll show you this here. Right, they've added. I'll show you some indices. So S&P, they sold it here. Now the thing is with this, they sold it here. Okay, they got punished, but then it did go in their favour slightly, and then on the third time they sold it, that clinched it, and then it just soared after the third time. So they sold it, and then they sold it here. And I think they probably, this one here probably would have had more of a volume because of that reaction. So they probably did pile in quite heavily there. They're looking at, well, fairly bearish. We know we've had like 3 bearish candles, 4 you could probably argue was a doji. That can indicate reversal. And then they did that, and I think, well, maybe we are bearish, and then they started to sell it really heavily, and then of course it really pumped. And that's just like emblematic of indices. As soon as we see any bearish activity, they're like, right, get in, we've got to sell it. And then of course when they get involved as a herd, they'll get punished. So that's that. The bot's going okay. Like I said about the Dixie, if we're going to have a drop in the EURUSD, they're likely going to be buy opportunities. So I wouldn't be too bearish about this. If anything, it's going to want to get the stop loss cluster at 109. Our stops are safe at the moment, right? Fingers crossed. And if that SLC was down here, I'll be fairly concerned. But because the stop loss cluster is above our stops, we should be fine. And if you remember, we're using 100% ADR stops, so they're quite wide. However, we need them to be quite wide because we need to avoid the SLC, and that's the target, okay? And that's the upper target. Bit too close for the time being, so I think probably down, get the one below, and by that time that would be higher up and larger, so we'll absorb that one potentially, and we're going to get the one above. So it goes exactly how I was saying with the Dixie. So if we come down on the Dixie and we come back up, it will hit resistance and then it will sell off. Alright, and that's the logic there. And this is the euro weighted dollar index. So it's just a case of getting fundamentals, technicals and sentiment rolled into one. If you've got any questions, let me know. I won't mind at all. I'm around all day, so I'm happy to take questions, and it breaks up my day as well, because I like to talk to people and I like to help, right? So don't be afraid about asking questions. I don't mind at all. And then that's it. So I'll be back on Sunday for the COT data. Don't forget we've got the NFP today, obviously, and we're probably going to see a bit of shenanigans with the dollar, but I think what's going to happen is that we'll be we're going to hit some resistance. If it does go up, we'll be sell here, and our Dixie trade's going okay. It looked like it would have been a good one to do, but we didn't publish this because of the poor risk to reward, because the stop was so wide. It didn't need to be that wide, but it is what it is. So that would have been a better one, a 1.8 R, but that's where it was. I didn't know where to put the stop loss, so we never did publish it. So we'll see how the COT data looks like for the dollar, and then have a good weekend, and I'll speak to you soon on Sunday for that COT data report.